Well, hello there. This is Slav Polinski Homes, coming to you from our Downers Grove office. And today we're talking about changes in the real estate market. And specifically, right now, what we're experiencing, especially with our buyers, is an increase of interest rates. Some of the buyers that I've worked with maybe 3-4 months ago were enjoying interest rates somewhere around 2.75%, which is phenomenal. Today, this past week, I'm noticing my clients that I'm working with now, they're more in that 3% area for interest rates. Now, while this may not affect everybody, it will affect some buyers who are very limited on their budget of what they could afford on a monthly basis. So maybe they're going to be looking at something a little bit less in price than before. So today I have with me Mr. Keith Hoffman, mortgage banker for Draper and Kramer. How you doing today, Keith?
Doing very well. Doing very well.
Fantastic. And so what I wanted to talk to you about today, so that you can share your expertise, is what's going on with the interest rates? Why are they raising right now? And what is the projection for the remainder of the year?
Well, everybody has a little different thought process. Right now, the traders are trading the bonds down. They're selling it off, which in turn makes things go higher. We are not seeing real inflation, but the inflation rate will be rising, which is going to cause a big difference in the interest rates. As they go up, so will interest rates. As far as this year goes, Personally, I think what we'll see is an increase in interest rates. We may see 1/4 to 0.5%, which is really not going to be beneficial for people who are buying or refinancing homes. Last year refinances were up 7% year to year, which is great. We've seen it fall off in the last month or so. We know that purchases last year were up. And so when you're looking at that, we're really going to look at some differences in interest rates. I think they will rise. I would not hesitate to tell somebody to lock right away, because I think that you lose a lot of power and payment if you're going to go ahead and wait. So that's really where I'm thinking. We're also looking at the value of homes. As the value of homes go up, which we've seen, the lower end is really going crazy. The interest rates are really going to be a little bad for you if they go up, because now you're going to be paying more for it. So the value of the houses are going up. That's really something that's important for you.
Sure, and that's a great insight. And as I mentioned before, that I think first-time home buyers might be affected most by this increase, especially everything's brand new to them, including a mortgage payment. And so what they were maybe qualified, if they were looking for a home, let's say for about 6 months now, what they were able to qualify on the high end before, they might not be able to qualify right now. That being said, historically though, even if it goes up to 3.5%, I mean, that's really, from a perspective of long range, I mean, that's just still an incredible rate, isn't it?
Oh yeah, we've seen these rates in 1980, they were about 15%. They've come back down. We are almost at historic lows. We were, and then they bounced up a little. And I'll tell you, in the last week or so, we've seen it go up about 1/4% in an interest rate. Mm-hmm. Based on the numbers this morning, it'll probably be another 1/8 of a point higher today, this afternoon. So that really does knock into your buying power.
Perfect. And currently, where are the interest rates on average for a 30-year fixed?
I knew you were going to ask me that. Technically, I'm supposed to give you an APR with it, but I'm going to say for a normal rate, whether it's a purchase or refinance, you're not taking cash out, and you have good scores, you're probably looking at around 3.125%. Mm-hmm. Like I said, about a week ago, it was 2.75%. You can probably add 1/8 of a point to that just for the APR. So I can't quote that exactly. It really depends on where you're going to be buying.
Okay, great. Last question from the information that's accessible to you in your industry and the people that you're talking to. Do you foresee the interest rates hitting or going above 4% this year? I know you don't have a crystal ball and anything could happen,
I,
but that being said,
yeah.
what's the word? Will it go that high? Is it expected to go that high?
Again, it really depends on who you're talking to. I don't personally think it's going to be 4%. I think it might get to 3 5/8, 3.625. Like I said, today we're up about 1/8 of a point. That puts us around 3 1/8, 3 1/4. So it's really difficult for me to say, but I do not anticipate it over 4%. If it goes over 4%, we're going to see a lot of inflation, which I think we are not going to find right away. Now, we will see inflation probably in the next 2 years or so. It will go up, but I
Okay.
don't see that foreseen right now.
All right. Well, Keith, as always, I appreciate your time, your insights, and your expertise in the mortgage industry. I'm sure we're going to have many more conversations throughout the year as things do change.
We sure will. And I
Yes.
appreciate it, Slav.
You're welcome. So this is Slav Polinski Homes. Interest rates are coming up. However, it's still historically at low levels, and it's a great time to buy and it's a great time to sell right now, as there are many buyers currently out there and not enough homes to go around. So this is Slav Polinski Homes. Make it a great day.